For before getting to the today's session, so my name is Vijay Bhaskar. So I have total 15 plus years of experience, out of which 12 plus years of experience on SAP. And coming to my expertise skills on SAP, so FICO and FSCM. So since 6 years, I am working on FSCM. So FSCM has been, I think you already aware of that one, right? FSCM has been divided into the two parts. Okay, so later in the upcoming, I mean, I am going to cover. Okay, what are the parts how it has been divided into two parts, and in which part which modules we are going to cover. So all these things I will cover. Okay, so this is my about my introduction. So at the moment I have done around 4 end-to-end implementation projects. So out of these, 2 are the treasury projects. Okay, so currently I am working on as a manager, so one leading organization. So these are my expertise skills. And coming to that FSCM. So what are the modules we are going to discuss and what we are going to learn? Okay, before getting to that one, okay, so is anybody is having any idea about FSCM? uh, Nagarjuna and okay, anybody, Madhu, okay, who do you aware anything about the FSCM? For what purpose we would require the financial supply chain management, and what are the advantages the organizations are going to gain? So is anybody is aware of that one? And first of all, why we would require the FSCM? Praneeth, anyone? Arjun, Ashok?
To make effective business, to make in effective manner, what are the open items we have with customers and how frequently our business is going, how frequently we are clearing the customer payments, and
Yeah, that is also one of the part, Pranit, what you told. It's a part of the, it is going to fall under the collections management, right? What you have told, it is right. It is also one point we need to keep in mind. So the what you have explained. So others, anyone, others?
Whenever we have a surplus funds, we can invest the funds or borrowing the from funds from the bank, all FSCM like money market FX.
Exactly. Exactly, Madhu. Okay. Okay, so these are the two major important things. Yeah, thanks, Madhu. Thanks, Pranit. So the basic fundamental rules. Okay, so there are two parts are there, as I told, the financial supply chain management. If we talk about the collections management, as Pranit told, okay, so the efficient manner, okay, how efficiently we are going to contact to the communicate to get into the money, the accounts receivable part. Okay, in FI, if we talk about, only we are going to sending the reminders, okay, by using the dunning functionality. But whereas in financial supply chain management, we have a separate concept, call it as a collections management. By using that collections management functionality, so we can contact customers in efficient manner, and we can get the money as soon as possible, so that what the organization is going to, okay, increase the inflow, cash inflows, and as well as so the organization will not face any issues as part of the collections management. Now let us talk about the, okay, in case if our organization inflow, cash inflow is as much as good, so what will happen? The organization will run their business in efficient manner, and also they will maximize their profits. Okay, so and also one more thing. So now if we talk about the treasury point of view, okay, treasury point of view, now let us say our business organization which is there in India. Now we want to expand our business into maybe within India or outside India. So what will happen? Okay, let us assume outside India we want to expand our business. Okay, so at that point of time, every business organization, what they used to do, they will not have sufficient funds. Okay, because they would require is a millions rupees. So okay, what they will do, okay, before start their business or before expand their business into outside the country, okay, what they will do, what are how much funds are to be required, okay, anything will be finalized, then they will go for the market. Means they will borrow the money from the market. Okay, before borrowing the money, we have the different kind of financial instruments are there. Okay, the financial instruments are the part of FSCM. Like it's an from the money market. Either you can borrow the money by using money market financial instruments, okay, like facility, okay, or else commercial paper, okay, or else you can go for the there are some other financial instruments, forex investment, okay. So the forex investment, by using all these financial instruments, okay, before borrowing also, even the organization is going to think that to to mitigate their risk. Means let us assume today the exchange rate is a so and so, okay, the from INR to USD 91, I mean 81 rupees today is trading. Then going forward, what will be the exchange rate? Okay, all these things to mitigate their risk, they are going to use a hedging functionality to hedge their risk. Means hedging means to mitigate their risk. Okay, in order to borrow the money, we have discussed. Then let us assume one more scenario. Now our organization have a sufficient funds to run business organization. Means the working capital, we have sufficient funds in our organization, and also there is a excess money, okay, which is there, okay, after allocating the budget to all the departments. What will happen? The excess money, the organization management has been decided that they would like to invest that money into some financial instruments. What they will do, okay, as a treasury consultant, okay, they will call to the treasury department, hey, we have the sufficient funds, I mean we have a excess corpus funds in our organization, you can, okay, try to, or you can make the excess money into the market. Means the treasury department, what they will do, they will try to do the analysis before investment the money, okay, in which if they are going to invest the money, so in which financial statement will give the more and more, okay, more and more profitability, and as well as at the same time they will think about, they will not only think about the profitability, they will think about the risk also, how much risk we have to bear in case if the worst situation goes into, then how much risk we have to bear. Okay, the organization, the treasury department will think all these scenarios and they will take a decision. Okay, then even let us assume one small example I will give you. Okay, now we have the 1 lakh or 10 lakhs rupees, which is a corpus fund which is available in our bank account. And now the organization has been decided that it has to be, okay, invest into the, okay, some fixed term deposit. Okay, before investing to the fixed term deposit, the organization will think like this. Means if the funds keep in our bank account, our own bank account, how much interest bank is going to offer. Then if the same amount we are going to keep in, I mean we are going to transfer that money, okay, into the fixed term deposit, okay, how much interest which we are going to get. Means the always the treasury department will think about which one is a benefit for our organization. Okay, and also by implementing the, okay, the FSCM functionality, even we will get the cash and liquidity forecast also. Means going forward, now today is the 25th of September. Now by end of this month, how much amount which we have to make, either it's a vendors or employees, whoever it may be, whatever it may be. Okay, now the based on this functionality, cash and liquidity management, we will forecast the analysis and whether the sufficient funds which are available are not in our bank account. If the sufficient funds are not available in our bank account, even after comparing with the accounts receivable and accounts payable, okay, if there is a deficit, I mean if it is a money, is it, I mean it's less than the I mean accounts receivable is less than the accounts payable. So at that point of time, the organization, the management will think that, okay, they will go for the arrangement market by using the different kind of different kind of financial instruments from banks, from facilities, from commercial paper, by forex. It's based on the business requirement. Okay, this is the somebody join. Okay, so this is the overview of the financial supply chain management. Now let us move to the financial supply chain management. Okay, so okay, this one. Okay, so now in that financial supply chain management, as you can see, there are two parts which has been divided. One, the part number is a credit management, collections management, dispute management, and biller direct. Okay, these are the four modules. It's a part one. Okay, so many people's okay have experience in this part. Okay, now let us move to the part number two. Okay, so this is the part two. Okay, treasury and risk management. Under treasury and risk management, what I am going to cover, see, I am going to cover these modules. Okay, then as well as under treasury and risk management, cash management and liquidity management, money market, forex and equities, futures and options, derivatives, commodities. Now earlier in ECC 6.0, okay, we have the, okay, we were able to call the commodities. The concept completely has been removed, commodities. It's not the new concept. Now the name got changed by the, okay, with trade finance. Okay, so now credit risk analyzer, market risk analyzer, hedge management. These are the topics which I am going to cover in the sessions. And also apart from this, the additional topics which I am going to cover is a this. Okay, this is the just overview of that. Okay, I just have given. Okay, then let's now the additional topics which I am going to cover: lockbox end-to-end process, okay, with real-time business scenarios. Okay, the purpose of, what is the purpose of the lockbox and how it will work, and what is the integration methodology, okay, how we can implement that one. Okay, then apart from that, BCM, bank communication management. This is a one of the tool, okay, where we are going to use, okay, for for outgoing payments we can use the BCM. So this is the one, the tool is when we want to, the payment should go as a systematic approval manner, so we can go for the bank communication management. These are the modules which I am going to cover. And here I just have given the financial supply chain management overview. What is the FSCM? Okay, improving the efficiencies of the accounts receivable and accounts payable team, leading to the, okay, improvement of the business cash flow. Okay, by forecasting the organization cash flow, we can provide extra working capital for the organization to invest in products. It means products means it's a financial instruments, money market, fixed term deposit, commercial paper, forex, okay, futures and options, equity. So we have the different kind of products are there. Okay, so this is a just overview of the financial supply chain management, and as well as what are the modules which we are going to discuss in these sessions. So these are the modules which I am going to discuss. Maybe somebody in earlier days, what I was teaching, only these are the modules. Okay, treasury and risk management and credit risk analyzer, market risk analyzer, hedge management. In earlier days I was only teaching this part two only, but now as a, because even I have a very good experience on, I mean, in these modules also, so I am going to teaching all these modules also as a complementary. It's not going to, okay, part of, to be frank, these are the modules only I'm going to teach, but these modules also, even let them aware the people, FSCM, full FSCM. Okay, the person whoever is going to learn, okay, the person should aware all the FSCM modules. Okay, this is what my intention. So that is the reason I am going to cover all these two modules. The part one full-fledged I am going to cover, okay, the part two full-fledged which I am going to cover. But in the part one, the biller direct, it's a completely the, we would require is a technical team help, because the technical team, I will just give overview of the bill of direct, for what purpose we would require the bill of direct implementation. Okay, and how it will be the functionality, I will explain you. But these three modules in front of you, okay. And one more thing, I am not going to copy any standard what SAP delivered product type or whatever it may be. Okay, then I will create the new, I mean, wherever the required, I will create the new thing even from the scratch onwards, from the beginning, from company code onwards. I'm going to create and I will execute all the scenarios in front of you only. Okay, I am not going to use any existing company code, and I am not going to copy any functionality from the existing one. Okay, in front of you only, we will do the configuration, then we'll run the scenarios. And also one more thing, the all the classes which I'm going to take in S4 HANA system, even I will show you some of the Fury apps also. Okay, how we can use the Fury apps, because nowadays Fury apps, okay, is one of the without Fury apps, I mean, the people are not showing interest. Even clients also, multiple clients only they want to Fury apps. Okay, they don't want to go by GUI. Okay, only for all the easy access, nowadays, all the easy access nowadays, every client is using a Fury apps. I think everybody, you already aware of this one. Okay, if you are working in S4 HANA, okay, so you already aware of this one. Okay, so this is about the FSCM overview I have given, and also what are the modules which we are going to discuss. So this I have explained. Okay, and also what is my commitment. Okay, whatever I have given, let me stop the screen one moment, stop the recording also. Okay,